All right, time for an update on nobody's favorite stock, Teva. Teva released earnings on the 9th of February, and I just wanted to do an update on how they're tracking against the three catalysts that I'm following. So just a quick update on earnings. Let me pull this up. So their earnings were, I believe it's $2.58 for the year. So based on today's trading, I think it closed at 770 or so. And so that basically trading at 3 times earnings right now, which is ridiculous. But there's a bunch of reasons why it's trading so cheap. I don't think there are valid reasons for it to be that cheap, and that's why I own this stock. But the main issue is just to recap the problems with Teva that I'm following. One is they have negative earnings growth negative revenue growth over the last few years. So they've had problems with their generic side in the U.S. and also their biggest proprietary drug lost its patent a few years ago. They've got 2 more up and coming ones that are starting to replace that, but that really hurt the revenue. Those 2 things hurt the revenue. So we've got revenue decline, we've got legal problems, 2 major legal problems, and there's been some big updates there. And the third one is on, what's the third one? Oh, the debt. So I believe the debt's probably the main issue that the market doesn't like, because they took on a ridiculous amount of debt. The previous management regime took on a huge amount of debt. And so probably the market's valuing this on an EV basis because of all the debt, but there's updates there. So I'm going to update on those 3 things. My general thesis is that if one of those problems is resolved over the next 2 years, the stock will re-rate significantly higher. I believe it'll re-rate to at least $20 from where it is now. But I think there's a chance that all 3 of those re-rate in that time. If we get 2 out of 3, I think that's a massive, that's going to put the stock in a rocket at some point. So in terms of growth, nope, there's no good news here. So the growth was slightly negative for the year in terms of revenue growth, and they're also guiding at down to flat revenue and earnings for 2022. So they're not giving us guidance that's saying, okay, we're going to get growth this year. I still think it's possible there might be small growth because they generally guide fairly conservatively. They usually end at the top end of their range or sometimes above. So there's a possibility there, but I think this is the least positive development. So we haven't seen much there. That's fine. I'm giving that 2 years to play out. In terms of the litigation, there's a couple of big events here. One is that their price fixing suit has been settled for $420 million. So that's one cloud that's gone now. So that's a big win. But the bigger legal problem they had is due to opioid getting sued by basically every state in the U.S. over the opioid crisis. So a couple of things have happened. They've settled with Texas. So that means that New York, California, and Texas are all done. No, they're going to appeal. Like there's going to be appeals in probably both of those, like New York and California. But the point is, we're getting there. And then also the other big thing is that the management put out an estimate on what this is actually going to cost them now. Before they didn't have really a range that they were talking about, but now they put out guidance that where they expect the cost to be. Where's the actual number? I've lost it. It ends up being about $120 million to $120 million to $160 million a year for 15 years is sort of their range that they've put out. Now I'm going to find that. Pull up the image here, but that's actually pretty good. So if you take that in terms of free cash flow, basically that's a range of 5.5 to 7.2% of their free cash flow that will go to paying these costs. So even after that, we would project them to be about 2.04 billion in free cash flow, up to 2.08, and that's down from 2.2 now. So they're still going to be highly profitable even after these things are done. So this is really good. We actually have some visibility here into where this is going. The management was confident enough to give us some ranges, so I think that's really great. So the litigation question is getting resolved, and I wouldn't be surprised if it's mostly dealt with this year. So that could be one of our catalysts that happens in the near term. The last one is the debt. So not as exciting here, but basically the thesis is still playing out. They're paying down the debt as per normal, and my theory is that they'll be down to their target level of 3 times leverage by the end of 2023, which is what they've guided towards. They're on track to do that. They're continuing to pay it down, and if we get to that level of leverage, then I don't think that the market's going to think this is a very big problem anymore, and they'll start valuing the company based on the cash flows as opposed to valuing it based on the fear of the debt. So yeah, just a quick update, and so everything's going as expected on most fronts. Good news on the legal front. So yeah, we'll check back in after the next quarter, unless something material happens in the meantime.